Hi, Selva here with another market update. Today I wanted to talk about one of Australia's favorite pastimes, property. Nothing gets a good discussion going at a gathering like property. In fact, last weekend I was out for dinner with a group of people. No one knew each other, we had all just only met. And after the usual what do you do, where do you live conversations stalled a bit, until we started talking about property. I think the big question now is where will it go next? Have prices hit rock bottom? Or will the downturn spread? It's a big concern, especially if you own property. It's a debate we even have at the office often. You may have seen the Harry Dent versus Phil Anderson debate recently. Phil Anderson is the editor of Cycles, Trends and Forecasts and author of The Secret Life of Real Estate and Banking. Phil expects Australian property prices to slow down in 2020 and then to increase for the next 5 or 6 years. Harry's view on what Australian property could do next is quite different. Harry thinks we could be on the verge of a large correction in the Australian property market. Who's right? Well, only time will tell. But the recent election is giving some support to Phil's theory. The coalition government has more property-friendly policies. This is even showing during the first weekend after the election. Clearance rates have bounced back up over the weekend. I was out and about on Saturday and I saw lots of young couples hunting for properties. Another thing happening supporting this is the fact that the Reserve Bank of Australia is looking at lowering interest rates. APRA is also looking at loosening lending conditions. Housing lending conditions have been tightening recently. The main problem I see, though, is where will demand come from, and will that be enough to sustain the high prices? With stagnant salaries, first-home buyers' demand will depend big time on loosening credit. Investors may also be hard to come by. The US-China trade war could impact foreign investment as investors turn defensive. Local investors may not be so keen to jump into the property market either, if they don't see the gains they've seen in recent years. There is also more apartment supply coming into the market, and there are a lot of empty homes. According to Prosper Australia, who looks at empty homes according to their water consumption, there were over 60,000 empty homes in Melbourne in 2017. They estimate that about 16% of investment properties could be sitting empty. If prices don't keep rising, we could see some of this supply come into the market. If you have ever played the game Monopoly, you know that you don't make money by having your area sitting empty, but by building and collecting rents. Yet that's how many have made money in Australia, by sitting on empty property while prices rise. But that is changing now. The two main things that I'm watching right now are credit conditions and unemployment. Loosening credit may give property a push. A rise in unemployment could mean game over for the property game, much like I saw in Spain during the 2008 property collapse. Thanks for watching. Please leave any comments or questions in the box below and don't forget to subscribe.